welcome. My name is Alana Isulova. I'm International Partnership Manager here at Cbonds, and I'm so glad that you could join today as we wrap up 2025 and with a look at one of the most interesting and undiscovered markets right now, the Nordic high yield space. Now you might be wondering why Nordic bonds? Well, the picture is this. The market knows for its strong discipline, transparency, and surprisingly attractive yields. Seems like it is pretty much enough arguments for me to have a look at it. And by the way, this is pretty niche market. And when you are entering something not super popular, like, I don't know, some US corporate bonds, right? Everyone know about it. You get some premium on that. So whether you already invested or you're just curious, today's webinar is for you. First, we'll build our foundation, answering what are the key market players and basically what creates this unique Nordic market ecosystem. We'll look in terms of the performance in the past, in this year, and we'll share some real stories from emerging market and high yield. We'll talk about some positions maybe you can consider just as the idea. Of course, you need to make the full analysis, but here we are in order to give you some insights on this market. This webinar is sponsored by Mind Money. This is the leading European investment technology hub, headquartered in Cyprus. So today you have the opportunity to know more about them and what they do exactly from their representatives. But just for your understanding, they provide seamless access to bonds on major marketplaces and as well as stocks, some exchange traded funds, IPOs, pre-IPOs, so lots of instruments in case you have diversified portfolios. And of course, because every good strategy needs good tool, we'll end today with introduction, some brand new, the AI-powered bond screener designed by Cbonds to help you find investment opportunities faster. Sounds like a nice plan for the next hour? Right. So I'm happy to introduce very handsome, experienced, and wise featured speakers today. So please welcome Timothy Stivens, the head of trading at VC UK Financial Services. We are having today Stepan Amosov, the independent expert in high yield and some emerging space. And please welcome Roman Zhatkin. He's the head of brokerage at Mind Money. Good afternoon, gentlemen. Thank you very much for joining us today. Let's probably get started. So first up, we have Timothy Stivens. He'll going to give us more insights in terms of kind of like basics. He'll walk us through the Nordic bond market from the very beginning, what it is, who is in this market, and why it stands out. Before I pass the floor, I just want you to know that Timothy has huge experience, about 25 years trading emerging market from both sides, so and buy side and sell side. So he had ran long and short equity book. He has good experience in running acquisition at long funds. So that's a big honor for us, Timothy. Thank you very much. And I'm passing the floor to you. Please tell us more about the Nordic market.
So yeah, just to introduce myself, as Lana said, I'm head of trading at VC UK. It's a multi-asset broker based in London. We specialize in global emerging market bonds and equities, but we have an increasing involvement in Nordic high yield, both from an interest perspective and now from a trading perspective as well. So I'm just going to give a short overview of the Nordic corporate bond market structure. As Lana said, I'll then hand over to the other speakers who will do a deeper dive into some particular issues. So, as Lana suggested, Nordic bonds are a lesser known part of the investing universe. A hidden gem, if you like. Um, and they have attractive features for both investors and issuers, which we think probably deserve a wider audience. So, if we could move on to the first slide. Great. So, what is the Nordic corporate bond market? Um, it includes any ISIN, which is Norwegian, Swedish, Finnish, or Danish. You can have other ISINs as well, but those are predominantly the main ones. Um, in terms of size, it has been expanding fairly relentlessly. We have outstanding volume now has reached 120 billion euros. Um, The split, intra-Nordic split is interesting. That's still dominated by Norway at 54%. This reflects the dominance of oil issues, and that's followed by Sweden at 37% of total outstanding volume. And that reflects the significant participation of the Swedish real estate market. So, where did this come from? Um, it essentially came from the GFC, which I'm sure everyone will remember for all the wrong reasons. But out of crisis comes some innovation. As the banks pulled back from lending, the fixed income markets provided an opportunity for them to get rapid access to capital when it was required. Um, so that's really what happened in terms of the genesis of it. Um, in terms of the structure on yields, the 120 billion size is actually significantly in high yield. There are now 500 distinct high yield issues to choose from, so it's attractive for any investor with high yield appetite. So far this year, in the first half, there were 12.2 billion euros of high yield bonds issued. So these charts here just show you exactly how that process worked, with specific look at the oil sector. As you can see, it's gone from 41% of the market to 79% as the bond market really is taking over from bank lending divisions, which had the dominant position back in 2010. So obviously that was the genesis of it, but this market is still growing and it's still got a lot of investor and issuer appetite. So what are the key reasons why this is an attractive area to be? I'm sure you all got experience of the relentless growth of compliance in our industry, and the Nordic high yield bond market does have a lighter touch in that area. Um, it invariably uses engagement letters rather than full underwriting agreements. And this is reflected in the relatively short timescale which the bonds take to bring to market. They have been known to be completed in under 3 weeks, relative to the usual 2 to 3 month timescale, which issuers are used to elsewhere in the market. And obviously, that's extremely attractive for any company which needs rapid funds. One feature which is common to an appealing feature for the issuers and the investors is the fact that the size of the market means that smaller players are treated a lot better. They get better access to the investors, and they get more love from the issuing banks and the issuers themselves. So that's one reason why it's still an attractive situation for issuers. So over to investors. Why are we interested in this market? Well, it does have, it can be more interestingly structured. You have a high likelihood of financial maintenance covenants. Again, like I mentioned, the investors here get a much more prominent role in the whole issuing process. Smaller investors can get allocations they really want rather than being downgraded, which is often the way in issues in the EU and the US, where the big guys take down a lot of the issue. Um, there is some evidence as well that pricing is more competitive. Um, when the enormous funds are not involved, it seems that investors can extract better terms from the issuers. Although it's hard to compare apples with oranges, some estimates suggest up to 200 basis points better pricing in Nordic high yield bonds, which is not something to sniff at. So who's taking advantage of this? Historically, it has been Nordic investors who have been a large majority of the investors involved, but this is changing quite rapidly. Indeed, non-Nordic issuers surpassed Nordic issuers in 2024 for the first time since 2017. And so far, 2025 is shaping up to follow a similar pattern. What are the characteristics of a Nordic corporate bond? So generally, these sizes smaller, typically between 30 and 200 million. I would say the average size seems to be around 50 to 80 million now. Typically, the maturity is shorter than the overall market, 3 to 5 years on average. They often have a floating rate option. In terms of law, it's usually under Swedish or Norwegian. Investors report better covenants. And as I said before, there is a shorter timescale to market. If you just want to take a look at this chart here, this visually demonstrates the increasingly international interest in this market. As you can see, the US in 2025 has pretty much doubled its proportionate involvement. Let's have a look at performance. Now, these charts largely speak for themselves. As you can see, there was an aggregated return of 11.4% in 2024. No real hiccups, nothing out of the ordinary, and it's been a story of steady and strong growth. Let's have a quick look at defaults. As you can see, the average Nordic high yield default there is lower, which is represented by the blue dotted line, is over a point lower than the average global high yield bond. And next here is a chart which just shows a comparison between the Nordic high yield market and some other global benchmarks. Like I said, it speaks for itself. It is an attractive zone, especially when you risk adjust it. This chart shows you the growing significance of the Nordic high yield market relative to what's going on in the EU and US. On the left, we have 2020. It represents 2% of US high yield and 8% of the EU high yield. And looking at year to date, 2025, it's now 13% of the US and 21% of the EU high yield issuance. Just looking at a few risks, one risk that the Nordic high yield market has historically suffered from is sectoral concentration. So, as I mentioned before, the Swedish real estate market and particularly the Norwegian oil-related and shipping-related markets, they were dominant. However, as you can see, there's quite a big change happened over the last 15 years. It's gone from 30% non-oil and shipping to 66% now. I think that means that anyone looking at this sector alone could now construct a relatively well-diversified portfolio, even when excluding oil and gas and limiting exposure to Swedish real estate. One interesting issue with the Nordic market is it is a really strong area for green bonds, which I know will be of interest to those of you with ESG mandates. there's a bunch of cultural and market structure reasons for this. I think regulatory is one, but there is a strong culture behind these in the Nordic region. Um, they are more concentrated in Sweden, Denmark, and Finland than Norway, obviously because of Norway's involvement in the resources sector. Now, just before I finish, the other main risk to the Nordic bond market has been liquidity. Obviously, this again has diminished significantly. However, the COVID dislocation did see 27 Nordic bond funds gate for redemptions until the market returned to normality. They weren't alone in that, but that is one thing which investors need to consider, especially if they have a shorter time horizon. And so just to finish, there is a table there of a summary of differences between Nordic bonds and benchmark high yield bonds for you to have a look at in your own time.
Timothy, thank you so much for such a comprehensive way of analysis from different layers. I definitely need to study your well-structured table just to, I would say, put everything on the shelves in my head. But thank you so much. I'm pretty sure many of our participants might have some questions to your presentation. So, dear participants, please leave your questions into question part. We'll pick the most interesting parts and questions for further discussion, which we'll have further after each presentation. So, Timothy, thank you so much. And now we are moving to our second speaker, Stepan Amosov. So he's the independent expert participating today, and he will share some, I would say, practical insights, some selected emerging market and high yield stories. So you could know more about the particular bonds and particular issues that we are talking in terms of Nordic high yield market here. Just for your understanding, so Stepan, he's a senior financial market professional with 15 years of experience in pretty huge and global systematically important financial institutions. So definitely he has lots of expertise which spans sales, trading, cross-border financing, portfolio management, and multi-asset structuring. So that would be very pressure and huge treasure for us to know more about some, I would say, practical cases from your experience and what you could notice on the market. So please, Stepan, this is your floor.
Well, basically, I would like to present some ideas in emerging markets and high yield space, which are present in the Nordic markets. So where to find value in emerging markets and high yield universe? Obviously, main global investment themes such as AI, big tech, or semiconductors are just not part of emerging markets playbook yet, as there are just a handful of developed countries which dominate in these themes. However, there are some themes in emerging markets which could resonate with global ones. In particular, the following areas could be of interest in my view. First, the new economy, such as ecosystems, consumer finance, and fintech stories, marketplaces. So basically anything which either repeats or maybe goes in the avant-garde of these businesses could be of great interest to investors. Second area is power and commodities like natural resources, energies, power infrastructure. And third one is logistics. So it's shipping, transport infrastructure, and similar stories. Let me start from the consumer finance stories. I have identified 3 names like Creditas from Brazil, Plata from Mexico, and Salmon from Philippines, which in my view have pretty good value compared to their comparables from the rest of the market and from other geographies. So Banco Plata, it's a consumer finance startup in Mexico. They started literally 2 years ago with credit cards and then expanded into buy now, pay later, point of sales loans and investment products. And Banco Plata is founded by former TCS Group management team, people who used to run Tinkoff Bank. They are now in charge of this business at Plata. In the end of last year, Plata has got an approval from Mexican regulator for a banking license, which will enable it to attract deposits. And they are going to launch this business early next year. In September this year, Plata has raised $250 million in equity from pretty prominent investors. And Plata also is launching their business in Colombia next year. There is one debit issue of Banco Plata in the market. You can see the key terms of the issuance here on the slide. So basically, it's senior unsecured with pretty good coupon rate, 15.5% per annum. Interestingly, that there is a call structure which envisages repurchase of these bonds at the discretion of the issuer at pretty high prices with pretty good premium. So if the investors who have purchased the bonds either in the placement or in the secondary market, even if they face these call options, the yield would still be pretty attractive. Second issuer is Salmon Group. It's also founded by former TCS Group managers, so basically the same DNA as Plata. They have partnered with local family, which used to own former rural bank of Santa Rosa. It was a local commercial bank. And basically they have transformed it into a kind of fintech business. So they have all the advantages of banking institution, but at the same time, they are implementing very advanced techniques and solutions to service their customers. Similarly to Plata, they have attracted high-quality shareholders afterwards, such as IFC, Abu Dhabi Investment Fund, ADK, Lunate, and few others. So basically, the mobile app is pretty popular in Philippines, and Philippines itself, they have pretty good economics and demography. They have more than 5% GDP growth post-pandemic, in the post-pandemic period, and they have population over 100 million people, and almost 2/3 of them are in a working age. As regards the bond issue, they have placed it in May this year, and it has 3-year maturity, also has call options structure similar to that of Plata, but not that often, probably every 6 months. And this bond issuance was combined with 28 million equity round, which in combination has catapulted portfolio growth in 2025. The third story is Creditas from Brazil. Interesting thing is that unlike Plata, and Salmon, Creditas has asset-light business model. First of all, they do secured loans only, such as home equity, auto loans, or employer-guaranteed payday loans, and they immediately securitize these loans with true sale. So over 70% of their total portfolio is now securitized in the form of funds or collateralized bonds. So pretty interesting business model. Not to mention, again, high-quality shareholders such as SoftBank, IFC, Fidelity, and others. And their bond is structured very interestingly as well. It has an equity kicker, which would enable the bondholders to receive some kind of additional upside, assuming the valuation of Creditas increases. This upside could be as high as 30% of the notional amount of the bond. So what do I like in these stories, in these consumer finance businesses? First of all, these digital channels, it means higher income and younger audience, because, well, there are a number of studies from Pew Research, for instance, which confirm the hypothesis that owning, well, initially the mobile phone, but then a smartphone, it highly correlates with the level of income and the level of education. And well, that is quite understandable, because if people have access to, say, online learning apps, they definitely will progress in the areas they would like to be employed or to be professionals. Second, there are no legacy issues, so they are less vulnerable to competition from traditional banks. Third is the strong shareholder base. Some names are real signs of quality. Also, very important factor is that they have demonstrated proven ability to raise both liquidity and capital through equity and bonds. So if there is any kind of liquidity event or say deterioration of credit portfolios, they certainly would be able to approach the market or approach the shareholders for new money, and that would be a strong factor of support. However, certainly there are some risks, and the most important risks which I see in all these stories are regulatory restrictions and social risks. I mean that at some point regulators may consider these businesses as too big to fail or too big to influence the systemic landscape in each particular market. And basically, we have seen this in other geographies when regulators were kind of restricting businesses of fastly growing banks or consumer finance companies simply by limiting either the deposit rates or by limiting the market share or introducing any other kind of limitations. And social risks, obviously, especially in election phase of political cycle, local politicians may want to exploit this narrative about elevated loan rates, and this may lead to similar restrictions as I have mentioned already. Also, macroeconomic risks. I think they are moderate for now, because we are in a very kind of favorable phase of global interest rate cycle, but they still may become significant later. Now let me focus on power and energy stories. I have two of them. So the first one is Wellbore Integrity Solutions. It's a global player in oilfield services. They are present in over 40 countries, basically in every country where there is a big oil. They are doing their business as well. And this company is a good proxy to global oil industry. Their clients are super majors, national oil companies, independent producers, and basically the company has very well diversified and strong client base. There are no clients which contribute more than 5% into the revenues of the company, and over 75% of accounts receivable have investment grade quality. So basically, it's a good proxy to investment grade businesses. Importantly, the company is doing their business not just in oil and gas, but also they have ambitions to grow in thermal wells. This might be a considerable portion of their business in future. They have issued debit bond. It is structured as a typical high yield bond with pretty good covenant package with all these covenants and tests. And importantly, there is a security package which includes not just pledges of shares of operating companies, but also assignment of intergroup loans and some real estate. And this real estate is assessed at some $65 million. So basically around half of the notional amount of the issue. And total LTV is assessed at 49%. So I think it's a pretty good coverage for this obligation. And my another pick is Kinetics LNG. That is an LNG infrastructure business of Karadeniz Group. Karadeniz Group itself, it's a global leader in the power ship sector with 40 power ships in their fleet. And Kinetics LNG owns a fleet of 11 vessels, and 10 of them are floating storage regasification units, basically floating power stations. And some of them are radiant leased, and some of them are undergoing conversion from LNG carriers into regasification units, basically into floating power stations. And there are lease contracts with other companies of Karadeniz Group spanning for over 10 years. The company operates globally. Basically, the vessels could be tracked online via maritime services, and you could see them in various locations in Southeast Asia, Pacific Ocean, Mediterranean, Caribbean, basically at any point where there is a need for energy supply. Most interesting thing for me was that Kinetics and Mitsui, it is a Japanese conglomerate engaged in various businesses. So basically, Kinetics and Mitsui, they have signed a memorandum of understanding on first ever floating data center platform. And basically, this is quite a good niche for Kinetics if they would be able to transform their business into something oriented on the premium audience, such as data centers, for instance, who are more stable clients and probably are paying premium to market rates for the electricity. So I think that would be a pretty good development for the company. Kinetics LNG, they have issued their new bond. It's not double-digit coupon. It's slightly below 10. But I still like the story because, as I mentioned, there is a very good credit profile of the company. There is a good security package, including this first lien mortgage on the 3 vessels. Also, guarantees and pledges of shares in the guarantors, assignment of earnings under charter contracts and insurances, and the charter itself. So what are the risks in all these stories? First risk is obviously commodity prices and energy prices. But these risks could be hedged either by the companies themselves or by investors. So if you say buy a bond of Wellbor, you can hedge it with deeply out of the money put option on oil, and that would provide you, in my view, pretty good protection against oil price drop and hence drop in the activities of the company. Second is social and political risks. Obviously, supply and energy is very socially sensitive business, in my view. And ecological risks are also significant in this kind of projects. And this is something which investors should bear in mind when considering all these stories. I would like to conclude my presentation with 2 observations. First of all, as you can see, there are no Nordic names in my selection. And I was thinking what might be the reason. And my only guess is that Nordic credits issuers are well known to the investors there. And the market is so efficient that there is no pickup over their fair price. Whereas for some names from outside of the region, there are some kind of pickups, and investors probably underprice them and demand considerable premium, especially in debit transactions. And my second observation is that ESG agenda in all these cases, it is kind of returning back to the market, but from the different angle as kind of being inverted or diverted. But definitely both investors and issuers are certainly taking ecological, social, and governance risks into consideration. And all these risks have their price. Last but not least, the disclaimer. This is not investment
we need
advice.
to mention.
Yeah.
Please be wise, always analyze everything, double check. But Stepan, thank you so much for sharing real gems. I'm already anticipating lots of requests from the audience to share your slides with them so they can analyze once again, or just basically once this webinar will be available in recording, please stop and just analyze those slides in more careful way. Definitely, you showed us very interesting names. Especially interesting, giving us very high coupons like 10-15%. Definitely, this is something curious for investors, even though not all of them are basically the Nordic part, but I would say the majority of our clients are chasing for some high yield bonds. So let's, in any case, analyze and see. Do I understand correctly that such opportunities might not be always kind of like liquid or popular and available anywhere to buy, I would say?
Yes, absolutely, Lana. It's a very good question, and yes, the liquidity indeed might be an issue for this kind of names because as I said, most of them are issuing debit bonds. So basically, debit transaction. It's certainly not for cautious investors. It is for those who can calculate the risks, quantify it, and tolerate.
I see. Well, let's continue our discussion, but I just couldn't stop and ask you just immediately on that point. Thank you so much, Stepan, for your presentation and your gems. So yeah, definitely such very interesting investment ideas are you definitely need to have a good partner to be able to chase them and get them in your portfolio. So I'm happy to introduce our third speaker. He's the head of brokerage at Mind Money. Again, I'm surrounded by huge experts today with big experience over 20 years on the market. So Roman is specializing on financial consulting and portfolio investments. He has many certificates, including some stock exchange traders. So, Roman, before we listen to your presentation, how we could assess, I would say, the most profitable trading financial instruments and portfolio strategies, would you be able to get these investment ideas and would we be able to purchase them with your help? Because I need to have some good partners to see how these bonds can be assessed and purchased in the portfolio. So tell us a bit more.
My name is Roman. Today I represent the Mind Money company, and I will quickly show you how we give you safe access to global markets with solid European broker. We let you invest in stocks, ETFs, bonds, and special high growth deals like pre-IPO, IPO in Europe and the USA. Before talking about opportunity, let's talk about the foundation. Mind Money has 15 years of experience and is regulated by the SISIC. We choose this jurisdiction because it gives you the best protection under European rules like MiFID II. The first, your money is held under asset segregation, which means your funds are kept completely separate from the company's money. The second, we are part of the Investor Compensation Fund, ICF, which protects you with insurance up to 20,000 euros. This setup also gives us passporting as the right to serve clients across all European countries and ensures high transparency in all our operations. Our main goal is to give you a wide choice for your investments. My Money platform provides access to over 35,000 financial instruments. This includes standard stocks and bonds, ETFs, which are perfect for quick portfolio diversification. Plus, we offer exclusive access to pre-IPO and IPO deals. We cover all major regions as Americas, Europe, Asia, Hong Kong, etc. We offer a full set of solutions for every investor. You can choose from two main ways to invest: brokerage services if you want to trade actively either on your own or with help from our experts. portfolio management for passive investing in ready-made strategies. No matter which you choose, you get our easy-to-use technology as our web terminal and personal account let you manage everything and send order online. And we have a multi-language support almost 24 hours a day. Opening an account is simple and can be done remotely. We can work with you no matter your country of residency. A big advantage commission for holding your securities is typically $0. We have two clear tariff plans. The smart tariff for trading on your own account, you pay just 1 cent per share, and the expert tariff is for trading based on our advice. You pay between 0.25% and to 1% of the trade value. It's a choice, lowest cost or expert guidance. For those who prefer not to trade, our portfolio management service is a hands-off investing solution. Your money is managed by market professionals with full transparency. Our pay structure is clear and based on results. The annual management fee is small, 0.5 to 1%, and the success fee is only taken from your profit, usually 15-20% of the income you receive. The next slide. Start investing with confidence today. Contact us using the details on the screen for a private talk about the best plan for you. And please remember, investing always has risk. Your past earnings do not guarantee future results. Thank you for your time.
Roman, thank you so much for introducing the opportunities. That's so nice that you are able to offer very diversified instruments for the portfolio. Especially, I would say this is incredibly important after COVID, because many investors decided to switch their portfolio and make it very diversified, and which is, I would say, kind of like the basics, but you need to, as you mentioned, be very wise with your investments, and you need to have a good partner with whom you are able to do this. Thank you very much for your presentation. Dear participants, before we start our Q&A session, I would like to remind you that you have the opportunity to leave your questions in Q&A part. Please do. We do already have a few questions which we'll discuss very shortly. So feel free to leave them. As we are almost finishing this year, this is time to, I would say, sum up your performance and maybe to revise your strategies for the next year. This is a very nice moment for you to maybe revise your toolkit with which you are able to find, analyze such gems as they were presented today with our speakers. Now Cbonds can offer you the comprehensive coverage of 1 million bonds globally. So no matter if you're dealing with emerging market or developed markets, if you're investing in sovereigns, in corporates, you can find everything with Cbonds. I would say you probably noticed the impact of AI this year. It has been integrated into many processes of research and maybe some small routine that you have. So definitely we also thought how we could improve our powerful bond screener, which you already know. It has many filters. It has more than 60 filters, and you are able to find according to different parameters by price, by yield, by price change, by rating. So you can export, so you can make different comparison on the yield map, but sometimes you just want to have a simple solution. Sometimes you just want to get the answers. And it seems like we are very spoiled by Google or some other research tools where you want you just type the question and you want to get the answer. You don't want to think over how you can achieve result. You just want to get it. So speaking with many investors and institutional and private investors, I would say many of them share pretty much similar feedback, and I also noticed on my researches, yeah, definitely you can use some AI for investment ideas, but the huge question always comes up is the data quality and the reliability of these search results that you're receiving. And for me, the answer is pretty obvious. Bond market is still pretty conservative market. The data is not much available at free sources, or it is partial information, or maybe sometimes might not be verified. So if you want to gain very reliable results, you need to be sure that this AI is based on the high quality data solution. And it seems like, please correct me if you know something more, but it seems like we are launching the first in the industry AI-powered bond screener. First of all, as you might understand, it is powered by our comprehensive database of 1 million bonds covered globally, international and domestic bonds. And I would say if I would describe this tool in 2 words. So first of all, it gives you a good coverage, because trust me, if you make search among, I don't know, 10K bonds or 1 million bonds, definitely you would gain different results. And secondly, this is simplicity of this tool. So let me show you just in practice, I would say, how it works. So you can see that you can type in a very basic mode, just like you would ask, I don't know, a friend, please show me some, I don't know, USD denominated corporate bonds of investment grade, for instance, rating at least BBB and the yield starting from 6%. And then you come up with results. You don't need to fulfill any filters. You don't need to apply anything. You just press search and that's it. So try to play with absolutely different scenarios which are applicable to your particular needs and your focuses. For instance, Eurobonds issued by European companies denominated in euro, investment grade, traded below 90, so you could gain more yield. Why not? Then you can definitely analyze all the details on the bond page. Please be attentive. Please read all the terms. All this data comes from primary sources. And you have the dynamics of price, of yield, the trading volumes, the prices, and the source where this data is coming from. You see highlighted in green, these are intraday quotes with 15 minutes delay from different stock exchanges. you see OTC market players who are able to give their bid ask for the day. You can see the trading volumes here in order to understand some liquidity. Just analyze all the details, maybe a small face value. I mean, trading lot is crucial for you. So you can also search according to such type of bonds. You have all the cash flow in order to plan your investments. All the identifiers, ratings, current, the historical one, bond classification, so you can find all these bonds in different systems. And the list of institutional holders, these are the funds who hold this bond in their portfolio with the market value and the last disclosure date. So feel free to play around with this tool. We made it available for all registered users at Cbonds. This is limited, I would say, time limited opportunity. So you can test and see how this tool works. And we are more than welcome to hear your feedback. As you would see, there are some scoring of your results. So please test it and mark if you're satisfied with your search results or not, because we're still improving this tool. We want to analyze how all these semantics and logic works in your particular results. So feel free to explore it. And of course, please don't forget that we do have very convenient bond screener, which is, I would say, outstanding at the market. In case you're curious to know more, feel free to scan the WhatsApp code or just email me. We'll discuss your particular needs. I'm happy to share and provide you a 1-week opportunity to test our platform. So you could, first of all, improve your tools for analysis. And secondly, maybe you would like to study more those investment ideas that were announced by our speakers today. Thank you very much for the attention. Now, the most interesting part, I couldn't wait to this. So, dear team, Stepan, Roman, I invite you to join our Q&A session for some discussion of this market, of high yield opportunities, and maybe some your ideas. I would say what you would like to wish to our investors to keep in mind for the next year. So, dear participants, please leave your questions into the question part if you still have some questions. We do have a question from Natalia. So probably I would address it to Timothy or Stepan. Please choose who wish to answer. So Natalia asks, are Nordic bonds liquid? The issue volume is negligible compared to typical US and UE corporate bonds. In addition, what is the typical minimum investment amount for Nordic bonds? So, Timothy, are you ready?
Yeah, I can take that. Yeah, I would say it's obviously being an OTC market, it's hard to have definitive volume numbers, but I would say on average it's trading somewhere between 100 and 150 million euros a day. I think a lot of that is skewed towards the lower yield names, and which are probably of less interest to us. Interestingly, given the growth in issuance, the average yield for the market is actually going up. It's up from 6% 18 months ago to I think somewhere between 7 and 8% now. So that is moving in a more interesting direction. In terms of liquidity, it's not something that you should be thinking I'm going to get in and out rapidly. It very much suits a longer term horizon. But that is, as I pointed out, those volumes are moving up. In terms of minimum investment, I don't think there really is one. There's a lot of issuance going on at the minute in the sort of 30 to $130 million size. It's really a question of how much liquidity risk you want to take relative to the issue size. I think if you want to sell rapidly, you have to have a little bit of patience and wait for your opportunity, but it is not totally liquid, and it is increasingly more favorable for investors.
Thank you so much. Well, I would say these are definitely the yield range, absolutely interesting for the investors to keep in mind. Carolina asks, which currencies do issuers prefer, and what can the Nordic high yield market do to remain attractive for issuers and potentially also attract further business? Um, Maybe Tim again.
Yeah,
Because
sure, I can take that.
sorry, it seems like you already more or less covered this in your presentation.
No, that's fine. To be honest, it seems that issuers, the Nordic issuers obviously are usually issuing in the currency in which they're domiciled. So that's the main one. I think there's a lot of the non-Nordic issuers are invariably in euros. Um, I think obviously from an investor perspective, you've obviously got to factor in the very different currency profile of each currency. Obviously, there's for example, a huge commodity skew with the NOK, but yeah, it's not really something specific. It's generally euro for non-Nordic issuers. In terms of what they're doing to attract further business, it seems like they're doing what's required at the minute, I think, given the growth. And off the top of my head, I'm not sure whether I could come up with something better than what they're doing. I think, like I said, the growth is driven by the light compliance, speed to market. Those are the main things.
Thank you, Tim. Okay, I have next question for Stepan because I'm sure he's waiting. So please share your insights with Bachman. I hope I pronounced your name correctly. So can you please share your opinion and maybe some forecast on some alternative investments in 2026, just from your perspective, maybe some markets, maybe some sectors or anything that you consider interesting in the next year?
Well, it's an interesting question indeed. First of all, what are the alternatives in this particular case? Yeah, because, well, if we are talking about, say, private equity or private credit, I think that decreasing base rates would play in favor of these sectors. So definitely all the alternatives should benefit from kind of positive movement in base rates and in less risky assets. But at the same time, there could be some kind of systemic events in some segments of alternatives. For instance, if we are talking about crypto, I'm not a big fan of crypto, but I'm just observing it. But as any other market, it definitely should experience both its boom, its bust, and its further existence, so to speak.
Okay, well, as I would say, bond focused, can you share some ideas in terms of bond investments? What would be interesting for risky profile and for maybe more conservative profile? What would you suggest to consider? Maybe the markets, maybe the types of issues that you highlighted, like new bold fintech, new banks, I would say new format of banks. So what would you suggest in terms of bonds? Interesting for the next year.
Well, I think in general, emerging markets should perform pretty well next year, and high yield as well. Again, because of this favorable phase of global rate cycle. But otherwise, as regards any particular sectors or stories, I think well. it really depends on consumer behavior, in my view, so to speak. So the areas where consumers see their value, see their interests, obviously should benefit. That's quite a general answer. I understand it, but
Well,
yeah,
the question was also very general. Okay.
exactly.
Yeah, thank you so much. And I have next question to Roman. Thank you very much for highlighting also diversified opportunities with your company. I'm pretty much anticipating lots of questions addressed to me after the webinar from private investors. Usually they like to ask how complex the process of opening the account with some participants. So can you please share some insights in your company? What is the process? I mean, how complex it is? Do you need some special KYC? Which documents are required for this purpose to launch with you? Romana, you need sorry, we cannot hear you, please. Yeah.
It's very simple to get access to buying stocks, bonds. You first need to open a brokerage account. This is done remotely, but you must provide proof of your address and the source of your funds. And the verification of the documents will take 1 or 2 working days, and after opening the account, you can start trading. And after opening the account, bonds are available to be traded. Usually the minimum amount for buying bonds on the market is 100,000 euros or more.
Well, that's pretty fast business process, I should say. Congrats. That's definitely convenient to launch. And just in terms of some investment strategies, you highlighted that you provide some portfolio management opportunities. So what is included? What kind of investment strategies are available for, let's say, private investors from, I don't know, Europe, US? Generally.
Okay, at my money, we use a varied multi-strategy approach to manage risk. We look at the core business facts like fundamental analysis, market charts, and use math models, core investment strategies as asset strategy, distressed assets. We focus on stocks that have dropped sharply in price, often by more than 80%. We search for companies that still have a strong chance to recover. Even a small recovery can lead to returns of 100 to 300%. We actively trade raw materials by finding price differences between related items using futures contracts. Our key focus is on price gaps in natural gas contracts with different due dates. Our decisions are based on real-time data on supply and energy demand analysis tools which are used by us with technical analysis, fundamental analysis, and we also track things like the amount of available money as a liquidity. And then my model offers three main strategies to match your goals and risk level. The first is ultra aggressive strategy targets. This strategy returns up to 30% per year with high risk. It uses borrowed money, money leverage, instruments to bet on stocks, commodities, index. The second strategy is aggressive, aims for 20 or 30% per year. It mainly buys cheaply priced stocks, including those that tend to move a lot high beta stocks.
Yeah.
And the third optimal balanced strategy targets stable returns, 10 or 15% per year with medium risk. It mixes US stocks and bonds to reduce fast price swings. And this strategy works well when the market is moving sideways or falling slightly.
Well, it seems like you have everything to offer absolutely any investor, regardless of their, I would say, profile, whether they have more conservative idea for investments or sometimes more risky and aggressive approach. So let me probably sum up our webinar today. So seems like the Nordic high yield market has matured from niche to cornerstone. And in 2026, the success definitely won't just be about being it. You need to navigate it with precision. I hope you have been equipped with great knowledge today with the particular stories that were shared by our speakers to think over. And now you have one more easy tool to screen bonds and find new investment opportunities without complexity with filters. A huge thanks to our brilliant speakers again, team. Stepan, Roman, thank you so much for your time, for sharing your knowledge and experience. And to you participants, to your excellent questions and your engagement. Stay tuned and follow up with the emails. If you found the presentation of the speakers interesting, feel free to contact them personally. Don't be shy. I'm sure they would be happy to share more details on their areas of expertise. I'm wishing you a successful end of 2025 and a strategically brilliant 2026. And let me finish this webinar with a wonderful thought, which definitely should keep me inspired for the next year. So during the year, you have only 2 days when you cannot change something. One is called yesterday, and the second is called tomorrow. So today is the perfect day for beginning, for thinking, for exploring new things under a new angle. So please keep in mind all the ideas that we discussed today. Be bold and start something new exactly today. Thank you very much for your attention and see you next year.
Thank you, Lana.
Thank
Thank
you.
you.